Shifting focus to the US, the Federal Reserve is widely expected to leave monetary policy unchanged at its meeting in the coming week. Those bets come in an environment where the economy continues to grow, although with intensifying risks and transportation fuel costs that are pushing inflation higher. The West Asia crisis is set to keep the Fed in a wait-and-watch mode at current Chairman Jerome Powell's meetings as well. We decode that and more in this next report.
Absolutely nothing is priced in terms of Fed rates for the April 29th policy decision meeting, but the market still leans in the direction of eventual rate cuts by the end of the year. The Fed itself continues to have 0.25% rate cut in its March economic projections for 2026. The consensus amongst economists remains a little more aggressive, predicting 2.25% cuts in the latter part of the year, one in September and one in December. The main interest will be Jerome Powell's press conference, which in theory will be his last given his term as chair ends on May 15th. As such, there will be questions over how he sees his legacy and his relationship with President Trump and whether he will choose to stay on at the Fed. Given his term as a governor doesn't end until January 2028, for now there is conflicting news whether this week's meeting will be the last for the current Fed chair. U.S. Attorney Jeanine Pirro on Friday said the Department of Justice has ended its probe into Powell tied to the renovation of Fed's headquarters. Instead, there would be an internal investigation led by the central bank's Inspector General. But a day later, President Trump said the probe has not been dropped.
Do you agree with the decision by Jeanine Pirro to drop the investigation into Jerome Powell?
Well, I want to find out. It's not dropped. They're looking into the whole thing about the cause.
Republican Thom Tillis has stalled the confirmation of Kevin Warsh until what he calls a vindictive prosecution of the current Fed boss has ended. Powell has already said he will stay on as chair pro tempore, which would only intensify tensions between the Fed and the president. In terms of the outlook for monetary policy, nothing new is expected. The minutes from the last decision suggested that the vast majority of policymakers saw employment risks as skewed to the downside. Inflation was also projected to be slower because of the economic risks from the developments in West Asia. That is likely to remain the way. The committee assesses the situation with little prospect of any immediate change in policy signaled. In terms of inflation, it has been 5 years since the either headline or core consumer price inflation were at below the 2% target. Higher fuel and airline fares mean inflation looks set to break back above 4% imminently. But the Fed can't do anything to ease the current energy supply shock. The central bank's focus is to ensure that inflation expectations remain contained, and for now that seems to be the case. Hence, investors expect some mildly hawkish rhetoric coming from officials. The Fed has to walk a very thin line and optimize policy for two very different goals, inflation and jobs. The central bank still views the current stance of monetary policy as being modestly restrictive. But with the new and a more dovish Fed chair taking office and key elections this year, rate cuts later are widely expected. For the Fed nominee, political pressure for action will continue if he toes Trump's line on rates. This is Bureau Report. WION World is One.